Welcome to Cashflow Positive, your one-stop channel for all things finance. Today, we're peeling back the curtain on a subject that's as ubiquitous as it is misunderstood: the world of banking. When you think about your bank, what comes to mind? A safe place to keep your hard-earned money, right? An institution that's there to help you manage your finances, perhaps even grow your savings. But is that the full picture? Or is there an unseen face of banking that we're not often shown? Banks have long been seen as pillars of trust and stability in our society. Yet, beneath this polished facade, the reality can be quite different. You see, banks are businesses, and like all businesses, they're out to make a profit. This often means hidden charges sneakily tucked away in the small print of your agreement. These charges can slowly but steadily chip away at your savings without you even realizing it. Unfair practices? Yes. Unfortunately, they're more common than you might think. There's a term for this. It's called predatory banking. And it's not just the small, unheard of banks that indulge in this. Some of the biggest names in the industry have been caught in the act. Remember the infamous scandal involving one of the world's leading banks? They secretly opened millions of unauthorized accounts, racking up fees for unsuspecting customers and damaging credit scores. A stark reminder of how those we entrust with our money can sometimes betray that trust. And that's just the tip of the iceberg. Let's dive deeper into the world of banking. Stick around for the next part of this series, where we'll uncover more about the hidden charges and misleading tactics employed by banks. Remember, knowledge is power, and here at Cashflow Positive, we're all about empowering you to make informed financial decisions. So, hit that subscribe button and give us a thumbs up if you find this content useful. Let's journey together into the fascinating and sometimes shocking world of finance. When you think of banks, you probably imagine a safe place to store your money, right? But how safe is it really? For most people, banks are akin to financial fortresses. They're where we stash our earnings and where we turn to when we need a little extra for that dream house or new business venture. But beneath the glossy brochures and friendly smiles, there lies a labyrinth of hidden charges that could be silently chipping away at your hard-earned cash. One of the most common culprits is the maintenance fee. Now, you might be thinking, but I'm providing the bank with business, why should I pay them for that? Well, you're not alone. Many people are taken aback when they discover that their bank is charging them for the privilege of having an account. Let's take the case of John, for instance. John was saving diligently for his first home, only to find that his bank was nibbling away at his nest egg with monthly maintenance fees. Next up, we have overdraft fees. Picture this. Sarah's car breaks down, and she needs to pay for repairs immediately. She's a little short, so she overdraws her account by £10. Instead of a helping hand, her bank slaps her with a hefty fee that far outweighs the small amount she was short. Then there's the dreaded ATM fee. You're out and about, you need cash, and the only ATM in sight belongs to a bank that's not your own. So, you withdraw your money and boom, you're hit with a fee for using an out-of-network ATM. These are just a few examples of the hidden charges that banks impose on their unsuspecting customers. They may seem small and insignificant, but over time, they can add up to a significant drain on your finances. Hidden charges, a sneaky way banks can take advantage of you without you even realizing it. So the next time you're assessing your banking options, remember to look beyond the polished surface. Your wallet will thank you. Banks often use appealing marketing tactics to draw you in. But what happens when the reality doesn't match the promise? This question takes us on a journey into the world of misleading marketing tactics often employed by banks. These tactics are not just unethical, they're sometimes downright deceptive. Let's dive deeper. First off, let's talk about those free accounts. Banks often advertise these as an incentive for you to join their institution. The word free sounds enticing, doesn't it? However, in many cases, these free accounts come with a catch. They could be free for a limited period, after which substantial fees kick in. Or they might be free only if you maintain a minimum balance, which could be in the thousands. If you can't meet this requirement, you'll end up paying hefty charges. Now let's move on to another tactic, the bait and switch. This is when a bank will advertise a product at a low rate to lure customers in, only to switch it to a higher rate once the customers have signed on. It's a classic move, but it's as misleading as they come. To illustrate this further, let's consider a real-life case. In 2022, a prominent bank was penalized for misleading advertising. They offered a credit card with a low introductory interest rate. However, customers found that the low rate quickly skyrocketed after a short period. The bank was fined substantially for this deceptive practice, but the damage to the unsuspecting customers had already been done. Then there are the hidden conditions in the fine print. Banks often use complex language and jargon in their terms and conditions, making it difficult for the average person to understand what they're signing up for. This can lead to unpleasant surprises down the line when fees and charges that were not clearly disclosed start to pile up. It's clear that all that glitters is not gold, especially when it comes to banking. So the next time you see a flashy bank ad promising you the moon, remember to read the fine print, ask questions, and do your research. After all, your financial health is too important to be left to chance. Relying too much on your bank can be a risky business, but how exactly can it backfire? You see, while banks are often seen as the bedrock of our financial system, there are several potential dangers associated with over-reliance on them. The first and perhaps most significant risk is the prospect of a bank failure. A bank failure isn't just a theoretical possibility. It's a reality that has played out in various parts of the world, leaving customers stranded. Allow me to illustrate this with a real-life example. Picture the year 2008. The world was in the grip of a financial crisis. In the United States, a historical banking institution, Lehman Brothers, filed for bankruptcy. The sudden collapse of this banking giant sent shockwaves around the globe. Millions of customers who had placed their complete faith and hard-earned money in this institution were left in the lurch. Their savings, their investments, their future plans, all jeopardized in the blink of an eye. Now consider this. What if you were one of those customers? What if your entire financial life, your savings, your mortgage, your retirement fund, all were tied up with one bank, and that bank suddenly went under? The impact on you and your family would be devastating. But the risk doesn't end with bank failure. There's also the risk of fraud and cyber attacks. In an increasingly digital world, banks are prime targets for hackers. If your bank falls victim to a cyber attack, your personal and financial information could be compromised. Again, the more reliant you are on a single bank, the higher your risk. Lastly, there's the risk of getting a raw deal. If you're too reliant on your bank, you might not shop around for better interest rates, lower fees, or more suitable financial products. You could end up paying more and getting less. So the next time you think about entrusting your financial life to a single institution, remember the risks. Diversification isn't just for investments, it applies to your banking relationships too. Over-reliance on banks, a risk many of us are unknowingly taking. So, with all these potential pitfalls, what can you do to protect yourself? The answer lies in two words: financial education. This is not just about knowing the difference between a credit and a debit card, or understanding the concept of interest rates. It's about understanding the financial world in which we live, and understanding how to navigate it effectively. Financial education is about empowering yourself with knowledge. It's about understanding how banks work, how they make their money, and how to use their services effectively without falling into the traps they often set. It's about knowing your rights as a consumer and not being afraid to question, challenge, and demand better from your financial institutions. Financial education is also about making informed decisions. It's about understanding the risks and rewards of different financial products and making choices that align with your financial goals and risk tolerance. It's about understanding how to manage your money effectively, how to save, invest, and grow your wealth. Moreover, financial education is about staying informed. The financial world is constantly changing, with new products, services, and regulations being introduced all the time. By staying informed, you can adapt to these changes and take advantage of new opportunities. But perhaps most importantly, financial education is about taking control of your financial future. It's about not being at the mercy of banks or other financial institutions. It's about making your money work for you, not the other way around. However, financial education is not something that can be achieved overnight. It requires time, effort, and a willingness to learn. But the rewards are well worth it. With financial education, you can avoid the pitfalls and traps set by banks, make informed financial decisions, and ultimately achieve a safer and more secure financial future. So, where can you start? There are many resources available, from books and online courses to financial advisors and consumer protection agencies. Start by educating yourself, asking questions, and seeking out reliable, unbiased sources of information. Financial education, the key to unlocking a safer and more secure financial future.